Hey everybody, it's Kim Wasabi here, trying to give you another video, updating you on price action that I'm seeing on the weekly chart here. I want to bring attention to this very large wick that happened on the 5th of August, or that week. It was a very strong demand wick, so I want to mark that off. We are currently trading into it. Anytime you see a very large wick like that, it's generally going to give you another opportunity for demand, just as the tops can offer areas of supply. Whenever you see the wicks, you trade into those large time frame wicks like the weekly. That shows adequate supply coming in. So price came back up here and just tested the bottom of that supply zone that was there. Same thing happened to here, to the initial supply zone that was made in March, and that was in April. These wicks came right up to it to test the bottom of that supply zone. So we definitely have supply that comes in at the top. And now we're looking for demand to show up here in this area on this very large wick. So to trade that, we will take a Fibonacci retracement of just that wick space and measure it out. I have a lot of fibs on here. The one that I'm very interested in is the 0.5 fib, the 50% mark. So when you trade these wicks, you have a bullish zone that's at the upper portion of the wick and the bearish zone that is in the lower portion of the wick. Closing below the halfway point puts you in the bearish zone for a trend over here and maybe more accumulation and break the low. As long as you're closing candles above the 50% mark, that's generally a good sign and demand is showing up. So the way to think of that is when price comes down and it rejects, there was a lot of heavy buying pressure, the lower portion of it, and then the subsequent demand came in and kind of continued it on momentum. This demand is not as strong, so the market's going to come back and see if they can shake you out of those positions. If it wicks below there and closes back up inside, this should be really strong demand down here, seeing as it was strong demand at one point. If it fails and you break below, this will likely become a supply zone, and anybody that tried to buy the dip is trying to offload at that point, and then you're really in distribution and you should be going quite a bit lower. And it might happen fast. It could happen very fast. But yeah, the demand wicks and supply wicks, pay attention to them. We currently have a supply wick right here that would likely get tested next week or something like that. Or maybe it does it, that this just reverses tomorrow. We do have news, I think in the morning, non-farms payroll coming out. So that could be a catalyst for a quick swipe down to 53.5 and then reverse during the day and close up higher. Closing the week out higher, or like closing the CME chart because they close on Friday night. If that closes with a decent up candle, it'll look pretty good for next week, or potentially further progress over the weekend. So let's look for opportunities. Zooming into the 4-hour chart, I'm going to mark off that box. I've already marked off the liquidity zones that I'm kind of looking at. I'm going to set up my box like this. And looking at the liquidities, where the stop losses are likely to be. These are the zones that I want to look at for trading opportunities. And I'll trade patterns that I see into those liquidities. Now right now we have, on the 4-hour, we have your high, low, lower high, lower low, lower high, lower low, lower high, lower low. In order to change the behavior, you need to close a 4-hour above this previous swing high. You're kind of making one right here, a kind of mini one. I don't like it as much, but get above 60K on a 4-hour closure. That would look like a higher high, and then I'd be swinging for these liquidities up here. Yesterday, the candle close came back inside the box. That looked like a swing failure pattern. I tried to buy the retrace here. The price came all the way back down. I don't like it, so I got out of that position. The reason I don't like it is because you have a double bottom here. I don't like to trade double bottoms because to me that is the market maker setting up liquidity to be able to push price lower, using the stop losses to get prices down to the area that it wants, potentially taking out all these stop losses. I'm not really seeing any great patterns here other than the lower lows, lower highs, but I suppose you could be doing a three-wave here and a three-wave here to finish off the pattern. Whatever gets you down to the 53.5 area. The only other pattern I'm seeing is this is three waves there. And now you're repeating this. Something like that. But I do think there is a buying opportunity coming soon. I don't know that I would catch the knife, but as soon as those stop losses are taken out, assuming price does get down to my target idea or my buying opportunity of the 50% mark of that weekly wick, and then you get a reaction, this would become your stop loss. Because if you have a reaction there and you get back up inside this consolidation, price should be targeting upper liquidity. And if price comes back down and breaks below that, it is targeting the 49,000 liquidity, or maybe lower. Maybe it'll just start marking down from there and you can get some real capitulation going. But until that wick is broken, I'm still trying to look for buying opportunities because there's so much liquidity above. I don't know if the market maker needs the liquidity above, because all of the liquidity above could be the market maker's sells. They could be shorting this market down extensively. And then we're going to have a nice capitulation event coming. So for me, best bang for my buck is to look for this liquidity to all be taken and trade up to this liquidity. See if it holds. You might have a buying opportunity where price was rejected. That could hold as support. You could have a support resistance flip and mark up from there, which I'd really like to see coming out of a potential mid-cycle low or a cycle low here early on in the month. You know, we're September 5th, September 6th now. So the last 2 months we did have a low that was marked on the 5th of July, 5th of August. We're right in that timing window for another potential bounce. We'll see how high the bounce gets, and we'll follow up if we get a reaction coming maybe tomorrow or over the weekend. We'll see what price is doing. So those are my targets. Those are my ideas. Trading from liquidity to liquidity. If you have any questions, hit me up in the comment section. Like and subscribe. Share the video with anybody you think would be interested in learning kind of how to trade this. Some people have asked me for charts on various altcoins. I don't really want to turn this channel into giving everybody trade setups on altcoins or whatnot. The intention of these videos is to teach you how to trade or how to look for these opportunities yourself, and I'm probably just going to stick with the same chart over and over. There's no real need to try to teach on different charts. What works on this chart is going to work on any other chart. So hopefully you're learning the methods and learning kind of the way I'm looking at markets, and potentially it's helping you implement it into your own trading. So look forward to speaking with you guys later. Have a good night.